It's crazy how different the market can look in just 24 hours. I made a video last night talking to you guys about why we need to listen up to when Jerome Powell speaks, and this is exactly why. There was a Jackson Hole conference today with Jerome Powell, and I said that it was going to be a very big conference to tap into because what's being said at these conferences and when Jerome Powell speaks, the market listens. And if we look at the market today, we could see that it was a very good conference. In fact, we're going to go over it. We're going to talk about it. We have a lot of information to go off of now. But overall, the market looking very, very good today. Ethereum up 11.4%, XRP up 5.3%, HBAR 6.1%. The rest of the market looking very green as well. Just taking a quick look at some of the price action. Let's go look at Bitcoin, 116K again. 2.7% on the daily, Ethereum 4.7, almost 4.8K, up 11.1% on the daily, XRP $3.02, up about 5% on the daily as well. And the rest of the market looking very good on the daily. But this is very exciting stuff, guys. And on top of that, right, Ethereum outperforming Bitcoin by a landslide on the daily, which is exactly what we want to see. And on the yearly, we're almost flipping Bitcoin in terms of the yearly gains. Again, another major thing that we want to see. So overall, very good price action, very good reaction. And we are going to address the meeting, right? We have a video clip of Jerome Powell talking and exactly what he said. It gave us a lot of data to go off of, and it also gave us, more information that really decides what's going to be happening going into September. I actually think that September is going to be extremely bullish. I said it many times over. We'll talk about that here in a moment, but let's take a quick look at the market. Let me just refresh, make sure everything is up to date. And market cap $4.02 trillion. Fear and greed back to about 56. No big surprise there. Overall, very good day for crypto. Just taking a quick look at Bitcoin, Ethereum, and XRP, right? This is what Bitcoin's price action looks like on the 7-day. We could see exactly what happened today just off of the lows of 111.7K. We didn't lose that 112K level. That was the big thing to watch for. And in fact, we had a massive impulsive move off of those lows. With Ethereum, again, Ethereum, very similar overall view here, except the fact that, we didn't really create any lower lows or anything like that. We didn't retest any major lows from like the beginning of the month as well. If we look at the 1 month, we never got back down to these levels. In terms of Bitcoin, we did. But again, nice impulsive move. Are we out of the woods yet? No. We're going to talk about that here in a second as well. XRP also having a very good day. Very similar to Bitcoin, XRP did create a lower low compared to some of its recent price action, but did not create a lower low going off of the beginning of the month. But we did get close to retesting those prices as well. But overall, very good reaction. Solid overall move across the board. And the biggest thing that I told you guys to focus on, stocks. Because again, if we're thinking about how bullish this was for crypto on the daily, I mean, this was a crazy candle on Bitcoin. Just taking a quick look at it on the daily. I just want to show you guys how bullish this daily candle was for Bitcoin. Just going off the low, this was a single daily candle of 5%. If we're looking at like the 3-hour and we're looking at this just going off of the bottom, you can see just how crazy these candles were in a single 3-hour candle. This was a solid move on Bitcoin. And the question here is, what about stocks? How good was it for stocks? Well, this is what stocks look like today. And again, just going off the daily view here, one single daily candle on stocks, guys, up 1.49%. I know that it doesn't sound like much, but for the S&P, this is wild to see. Now, on top of this, looking at this from the 4-hour view, what did I say? So I said that we filled this gap here. We should hold this low. We're looking pretty good on the 4-hour closes. We need to flip this midline at about 60. It was almost 6,400 exact. Guess what? We absolutely smashed through this. And we just retested the all-time highs. Now we are watching next week, because next week could be the week where we start to see the S&P break over its all-time highs, go into price discovery yet again, and finally target, and I do have it on the daily chart, finally target that $6,500 level, which would also get us to that 6960 target point on the S&P. So far, very good price action, very good reaction. And you might be questioning, well, Nick, how bullish was this meeting? It was extremely bullish because the number one thing that we have been talking about, the biggest thing that we have been, stressing about and waiting for, and, we've been trying to predict it, rate cuts. That's right. Rate cuts. We have been fully focused on rate cuts. On CME Group, we do have a 75% chance of a rate cut decision happening in September 17th to be exact. On top of that, we also have another 86.7% chance in October 29th, and a 96.3% chance of a rate cut in December 10th. We are fully locked in on these months and on these dates for rate cuts to be hitting the market. This will unlock a massive amount of liquidity for the markets. It will cause a tsunami to hit the markets, and the Fed is the one that will unleash the bulls. But today, the Fed already did that. The Fed unleashed the bulls because this is what we got at the Jackson Hole meeting. This is from our Crypto Talk. Jerome Powell just shook markets at Jackson Hole. What was expected to be a hawkish warning turned into a dovish pivot that could ignite crypto. Here's what really went down, but check out the video clip first before we get into the information.
The balance of risks appears to be shifting. In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework, as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply.
So, although, yes, a few of the comments here could definitely be seen as hawkish, this is a very, very dovish pivot from the Fed that did ignite the market. And not only did it ignite the market, it unleashed the bulls. Down here we have the setup. Markets entered the week jittery. Bitcoin was sliding, Ethereum stalled, stocks pulling back. Why? Traders feared Powell would double down on higher for longer. Instead, he flipped the script. Powell opened with the big picture. The U.S. economy is in a challenging situation. Inflation still sticky at about 3.1%, but the bigger threat, jobs. Employment growth has slowed to just 35,000 plus monthly. We do have, the key takeaways here. Risks now tilt towards jobs, not just inflation. Labor supply is weakening with demand. Fed scraps flexible average inflation targeting. Stable inflation expectations no longer assumed. Signals possible rate cut in September. Yes, the environment is telling us rate cuts. But we also have, he downplayed tariffs as temporary, but he admitted immigration is falling and that the neutral rate may rise, reshaping what sustainable employment even means. Translation, old models are breaking. The key turn, Powell stressed that employment risks have increased and the Fed may need to adjust policy. That was the dovish tell. Rate cuts are back on the table. Markets heard it instantly. Bitcoin jumped from 112K to 114K within minutes. Ethereum bounced off 4K. Stocks ripped 1% plus. Gold up 1%, dollar down. Risk assets cheered. Yes, because risk assets are on the table right now. The dollar is weak. Risk on assets are extremely bullish. Why the excitement? Because this wasn't the hawkish Powell of 2022. This was a Fed chair signaling he's ready to protect growth, even if inflation isn't at 2% yet. Powell says the Fed is moving away from its strict 2% inflation framework. They're going to let inflation run hot. Option traders were already pricing plus 2% swings, but the speech tilted everything green. ETF inflow spiked, crypto stocks like Coinbase reversed losses. The market heard cheap money is coming. The data shift was immediate. Pre-speech, September cut odds equal 70%. Post-speech jumped above 89%. Year-end easing now priced at 57 BP. The first real dovish pivot in months. Context matters. Just days earlier, Fed officials were hinting hawkish, markets brace for pain. Instead, Powell prioritized jobs, not just inflation. It was a reset moment. Bitcoin dominance has been sliding. Alts have been holding better than expected. A dovish Fed could pour fuel on that fire heading into Q4. Liquidity hunts risk, and crypto is risk on. Skeptics warn, don't over extrapolate. Powell said policy is still data dependent. If inflation flares again, cuts could stall. But for now, the signal was clear. The Fed is blinking. This speech may be remembered as the trigger from macro relief to crypto acceleration. Markets finally got the green light they've been begging for. Powell chose jobs over fear. Cuts look likely in September, and crypto just got its cue. This is extremely bullish for the entire market. I'm very, very happy about this. And if we're thinking about just how many eyes were on this meeting, guys, here we have the announcement from Watcher Guru in terms of the Fed Chair Jerome Powell suggests that current conditions may warrant interest rate cuts. 1.5 million views, 24,000 likes. This is what the Bitcoin setup looks like. Again, are we out of the woods just yet? Not exactly. We just hit the first major midline retest on Bitcoin, something that we saw on the S&P, but we already broke over it to retest the highs. That's what we want to see here. We need to break this midline, clear it completely. That way we could target those highs of 120 plus K. So we still have some work to do here for Bitcoin. In terms of Ethereum, going into today, I said it looks as though Ethereum is looking pretty good here. We tapped this blue zone on August 19th. We put in a low. We have higher lows here. All we needed to do was flip that midline. Boom, we flipped it. We skyrocketed it and retested the 2021 all-time high on Ethereum. Now, yes, we were going to reject this regardless of how we got there. Now we're looking at just, a little bit of chop, a little bit of consolidation, but we should be breaking over this all-time high very soon. I wouldn't be surprised if we broke over that all-time high leading into September. That would be insanely bullish for altcoins. I don't think that people realize how bullish it will be. Go back to 2021 just for reference. But on top of that, XRP, XRP also in a very similar position to Ethereum where we do have higher lows here. We want to create higher highs going off of all of this price action from roughly the middle of the month. After we do get over that price action, then we should be able to target those highs from the end of July. But right now, XRP just kind of chopping against some resistance. We can clearly see that just going off of the daily candle closes. So it's going to take a little bit of time here on XRP. We still need to see Ethereum really kind of break out higher. But overall, the market looks very good. And I do think that we are going to get rate cuts in September. And I think that this is going to cause the entire market to skyrocket even higher. And the Fed has given us finally what we needed to see, what we needed to hear. I'm very, very happy about this. And with that being said, guys, I hope that you guys enjoyed this video. If you did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow